China is yet again bucking the global trend of interest rate hikes, with policymakers there slashing borrowing costs to prop up a struggling economy. The central bank in Beijing has announced a slight reduction in its main benchmark rates to encourage lenders to extend more credit to households and businesses. Monetary authorities are also injecting more than $1.7 billion into the economy every day. That aims to further grease the financial wheels of the world's second largest economy. These adjustments follow a recent slew of downgrades and growth forecasts by private sector analysts. The latest came last week from Fitch Ratings, which said it expects the Chinese economy to expand by less than 3% in 2022. That's down from the previous projection of 3.7% earlier this year. Now, for more, let's go to Han Tan, Chief Market Analyst at the Exinity Group in Abu Dhabi. Welcome back to the program, Han. Now, what makes the Chinese economy different from other major markets? As we know, the US, Europe, they're all raising interest rates. Why is China moving in the opposite direction?
I think a lot of it boils down to China's insistence with its COVID zero stance, right? So that's why we see this post-pandemic recovery in China really struggling to gain momentum at a time when major economies have been roaring past the pandemic. And that's translated into the official inflation figures. You see, for example, US inflation near that 40-year high, whilst the official inflation numbers in China are still in the low single digits. So I think that is feeding this divergence in the monetary policy stances for China versus the rest of or at least for developed countries.
Right, so you mentioned their inflation running at a 40-year high in the U.S. And of course, the U.S. Federal Reserve, that's the American central bank, they are meeting this week to decide on interest rates. So is the Bank of Japan, where inflation is also a concern. What do we expect from these policymakers?
Right, so for the Fed, they're fully expected to hike by at least another 75 basis points. But there is chatter of a potential 100 basis point hike, something that we haven't seen since 1989, right? Now, for the Bank of Japan, its policy settings are expected to remain unchanged. And so there we go again, the word divergence. I think this policy divergence will be evident between the US and Japan, and that could translate into more weakness for the yen that we've seen really for most of this year.
All right, Han Tan from the Exinity Group in Abu Dhabi, thank you for that very clear analysis and explanation.